Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago talking energy. We got to talk crude oil down about 1 3/10%, so a little over 1 1/4%, down around 73 and change. We got to a low of 72.51 before rallying back above that 73 level off of an EIA build. Normally the EIA inventory report comes out on a Wednesday. We had the holiday yesterday, so the report came out today instead, and we saw a small build in crude oil inventory, small build in gasoline, small draw rather in gasoline inventories, but we were expecting a draw on both. So that build caused a little bit of pressure. Another part of that EIA report that I've been watching that's very important is the refinery utilization number, which was set 97.5%. Last week, came in 97.1, so a little bit of lightening up on that RU number, showed a slight pairing of demand, not much, still at a very, very high level for the use of those refineries, still an unsustainable level. So it's not unusual that we would see that come off a little bit, but it does, in the case of this build, represent a little bit of lightening up of demand. We also had the Saudis report to OPEC that in June they had already upped their production by 500,000 barrels a day. So this is speculation now. Was that in preparation of the production cut lightening that they agreed to with Russia? In other words, slight production increase of 800 to 1 million barrels a day, or was this already in place and now we're going to get 1 million barrels a day on top of that? So it's a decent reason for longs to sell out and take some profits, cause a little bit of the drop that they did. We'll have to wait for the July report or some comments out of OPEC. We haven't really got much in the way of comments except that they're committed to that 1 million barrel a day increase that they agreed to with Russia in production. Now again, this 500,000 they reported, is that post-meeting? Some of it before, some of it after, or was all of it just done in order to sort of absorb the losses that we've got out of Venezuela and now Libya? We're not sure at this point, so that again is a good reason for longs to sell out. And lastly, the trade war is definitely on, at least as of this afternoon. We have no sort of reprieve from the White House, nothing out of China in terms of coming to the table to prevent the implementation of the $34 billion in tariffs that supposedly start tomorrow. Now, I would expect a little bit of a stay of execution, so to speak, but we haven't gotten one yet, and that's affecting the picture of overall demand, which of course affects crude oil as well as all the other commodities. So the sell-off today makes a little bit of sense. It's not really dramatic, still above $73 on WTI, but a fall of over 1.25% today. This is Bob Iaccino talking crude oil futures from the CME Group trading floor in Chicago.